Whether it's a game of chess or a boxing match, the right move at the right time can pay dividends. Let's talk about wealth and wealth management with the very best in the business. He is Marcus Warren, who joins me now. Marcus, we talk about the right move at the right time. First of all, the right time. End of year, there's a lot of little maneuvers you can do to save yourself some money, right?
Yeah, there is. First of all, I think earlier, though, did you say that it was Sonny Crockett's 72nd birthday?
See, he remembers, folks. I know he looks young, but he actually remembers Sonny Crockett. Yeah, Don Johnson, 72 years old. Can you believe that?
Yeah. If I would have known, I would have worn my lime green blazer with the T-shirts.
Yeah, there you go.
Yeah, been all right.
That was their look, wasn't it? The Miami Vice look?
Yeah.
Let me see. So it was
T-shirt and blazer.
It was Sonny Crockett and what was
Tubbs.
His? Tubbs. That's right. I wanted to make sure I had it right. Boy, they were the duo back in the day.
Yeah, they were.
It's like you and I, man.
There you go.
We're the duo right now.
Crockett and Tubbs. Right in front of everybody right now.
You're the Don Johnson.
Talking retirement.
You're the Don Johnson. You're the lead here. So here we go. All right, let's talk retirement. Let's talk about six. Are these like your go-to moves at the end of the year?
Yeah. So as we approach the end of the year, what we tend to find is people want to tie up any kind of loose ends, and so we thought it would be wise to give at least 6 solid tips to kind of shore up your finances before you head to the new year.
Okay. So we're going to take them one by one here. And again, Warren Wealth Management, he is Marcus Warren. He is our go-to resource as far as wealth management and retirement. So number one, review your investments. So just take a look at them and decide if you're going to maneuver, or just how's that work?
Yeah, generally when we talk about review your investments, generally we're talking about rebalancing. And so everyone should have at least some sort of asset allocation plan, a percentage of stocks, a percentage of bonds. And what tends to happen throughout the course of the year, sometimes those percentages, they get out of whack, right? And so say, for instance, you had a 50% stock portfolio and a 50% bond portfolio. Over the course of this year, since the market's gone up, it's probably thrown that balance, it's probably thrown that allocation out of whack. And so what happens is, as you get close to the end of the year, you need to look at that and then rebalance. So if you were 50-50, now you might be 75-25. You might want to take some of that off the table and reposition it back into the bonds, so you're back at that 50-50 split. And so you have to review those investments each and every year. I know a lot of times, especially when the market is going up, people don't want to rebalance because they get FOMO, the fear of missing out on extra gains that may or may not happen, but it is a good idea to rebalance at the end of the year. All
right, we're talking about end of the year, 6 key moves here. Another one is review your retirement plan, and this is something you also specialize in.
Absolutely, and so there's a couple of different routes that we can go when we talk about retirement plans, but as you come on to the end of the year, if you are still working, then you need to see if you haven't maxed out your 401k, whether it's a Roth or whether it's a traditional a traditional 401k, you might want to look at doing that if possible. The max contribution, if you're under 50, $19,500. If you're over 50, you can contribute up to $26,000 in your Roth 401k or your traditional 401k. If you don't have that, then if you have a traditional IRA or a Roth IRA, you can contribute $6,000 each year, the max contribution if you're under 50. And if you're over 50, you can contribute $7,000. And so there's a lot of different options that you can invest in if you take the time to plan out.
All right. Next up, harvest your tax losses. Okay, so that sounds pretty much self-explanatory, but if you would go a little deeper.
Yeah, well, the market, for the most part, it's performed fantastically over the last year, right? The Dow Jones is up 18%. The S&P, as of December, is up 24%, right? And because of that, sometimes you have these gains, but you also might have stocks or mutual funds that haven't done well, so you have losses. And so how can you make lemonade out of lemons? You can take those losses and offset those against the gains that you may have to lower your tax bill. So you might want to look to harvest those tax losses before the end of the year.
All righty. And the next one up here is, I want to make sure I get this right here. It's your health plan. This is why I had to double take here, because look at your health plan. That's something you usually wouldn't talk to.
No, well, it depends, because we deal with people who are a year or two away from retirement, and then once you're in retirement, there are still situations where you're looking at health plans. And as a matter of fact, today's December 15th. Today's the last day to sign up for that open enrollment.
I hate to interrupt you, but we're going to have to toss to Wave 3 News anchor Brian Schlonsky with an update on the president's visit to Western Kentucky.
Complete that aerial tour, and since then he has now been meeting with officials there in the Mayfield area. So first landing on Air Force One, getting off, talking with Governor Beshear, then heading off on Marine One, the presidential helicopter, to tour the damage by the air. And now as you take a live look inside the area where he is right now in Mayfield, this is the briefing that we expected the president to attend this afternoon. We know he's there with local leaders. You can see Governor Beshear is off to the president's left. There's some members of law enforcement there as well. And they're just talking about the state of what the community needs right now. Obviously, the president has already responded, approving a major disaster declaration for Kentucky, several other states as well. So he will meet with these local leaders, talk a bit more about what that means and what the communities need as far as federal help. So this is the shot inside there right now, undisclosed location there. As we know, the president is touring the damage there. John, will come back to this as we learn more about what the president actually talks about here with some of our local leaders, including the governor.
Let's go. Again, real quickly, and I hated to interrupt you there, but of course it's very important. However, you were talking about the importance of choosing a health plan, so give me a little review on that one again.
Yeah, so we're coming upon, actually today is the deadline for open enrollment for Kentucky Connect, and basically what that means is, you know, there's a couple of different plans that you can choose from. Actually, there's a lot of different plans in Kentucky Connect that you can choose from, but in regards to this discussion here, you know, generally people have the option of choosing from a traditional low deductible plan, or they can go with a high deductible plan that generally has cheaper premiums. And when you have that high deductible plan, it also allows you to access your health savings account, right? And the only thing about the health savings accounts and these high deductible plans is basically the fact that if you have health issues, then you can find those plans to be cost inefficient as far as costs go. So you have to just kind of tread lightly when you're choosing what health care plan you want to go with moving forward.
You also say you should plan your RMDs. Now, I've been listening to you. RMDs, required minimum distributions, right?
Yes.
See, look at me. I'm catching on.
Good stuff. So, yeah, so your required minimum distributions, if you're over the age of 72, then you have until December 31st to take that distribution from your qualified plan, IRA, 401k. And if you do not, either if you refuse to or if you forget to, the government's not playing. They assess a 50% penalty if you do not take that required minimum distribution. So make sure that you take that. A couple of things that you can do with it. If you're in that fortunate position where you don't necessarily need it, you can contribute to a grandchild's education account, a 529 plan, or if you have charitable inclinations, you can send that RMD directly to the church or charity of your choice, which is called a qualified charitable deduction, and then it's not included in your taxable income. But you have to make sure if you're 72 or older and you have an IRA 401k that you take that RMD.
All right, and finally, this is something that you've discussed before, but it's important. It's the end of the year. Yep. Roth conversions, right, Marcus?
Yes, Roth conversions. Yes, I do talk about this a lot.
It's a good thing.
Well, we're in this environment right now where we have these tax cuts, the Tax Cuts and Jobs Act that passed back in 2018. Unfortunately, they sunset or they expire at the end of 2025. So going into 2026, we already know that tax rates are going to be higher. So it might make sense right now to take money from your tax-deferred account, IRAs, 401ks, 403bs, and look to move or convert money into those tax-free accounts via a Roth conversion. Pay tax at the lower tax rate, position your money tax-free, and watch it grow from there. So that might make sense. People have to think about those things before the end of the year.
Yeah, all of this fantastic advice is available to you with Warren Wealth Management and Mr. Marcus Warren. Marcus, if folks would like to give you a call, 15-minute conversation, find out if it's a good fit from both sides. And I know that everything that you do with your clients is very personalized.
Yes.
Because I think it's important. You say some of these, this was an overview, and some of these things apply to some folks, maybe not so much to others, right?
Right. And so, what we decided to do is say, you know what, we may or may not be a good fit for everyone. Everyone may or may not be a good fit for us, but why not find out? Why not explore that? And so we set up this line. If you go to talktomarcus.com, it brings up my calendar. You'll schedule that 15-minute phone call. We can find out if we're a good fit, and if we are, we can move forward. If not, we can just part as friends and go from there.
There we go. And if you'd like to hear more of Marcus and his expertise, you've got podcasts, you're on Spotify, any place that you can listen to podcasts, you're available.
Absolutely. We have a real good financial retirement podcast. We call it infotainment, a lot of good information, and hopefully you're entertained along the way.
There we go. Marcus Warren, the best to you and your family. Really appreciate you.
Thank you.
You are my expert when it comes to, wealth management, taxes, and, of course, your retirement. Right now, we're going to throw it once again to